Good day, everyone. Welcome to Bears and Bulls. I'm your host, Riva Galveztan. Our guest for today is actually a very special guest. We have Mr. Professor Danilo Antonio, President of Asian Center for Entrepreneurship and also President of LandExcel Consulting. Good day, Professor Antonio.
Morning.
Good morning. So today, actually, we're going to talk about real estate for entrepreneurs. So, of course, in this time of crisis, we want to have, alternative ways of earning money, and, maybe real estate is one thing you can explore. So, Professor, what is the state of the real estate industry right now? People know that there are a lot of, things happening in the industry, that there's recession, etc. So how is it right now, or in the past years?
The past year, actually, the real estate business the past year has been pretty good. Maybe as against what's happening in the U.S. economy, the Philippine real estate sector is actually steady, if not booming. There are certain segments of the real estate business that's in effect even improving, like the residential sector. So by and large, just to correct maybe some misimpressions that the real estate business is down, it's actually doing quite well despite all the negatives that we hear about it.
That's great. At least that's something that we can look forward to. Especially a lot of misconceptions about it. And I think in any business, real estate is very important. So maybe you can give us some points on how real estate actually is a very crucial part of a business, of a personal of one's personal assets, etc.
Actually, whether you're a person or a business, real estate is important to you, one way or the other, no? So the way wealth is measured actually by an individual is not only on the cash that he holds, but also on the real estate that he has, no? And taken together, that forms your net worth, no? So as a person, it's important to you to also have what we call real estate assets, no? So as you evolve over time, actually, your real estate assets should be a major component of your net worth, no? Aside from the cash that you hold or investments that you make. Because people or banks especially will look at you later like what is your net worth like, no? So that's your financial balance sheet actually, no? So if in school, it's important for you to have a good academic record. Once you're already trying to get into business or trying to measure yourself, people will look at you on the basis of what your financial assets look like. And the total assets that you hold, a portion of that will be real estate. No? Now, if you're in business, more so, no? We cannot avoid maybe being involved in some real estate transaction. If you don't own your the business where you're located, you have to pay rent.
Of course,
so that's a heavy component of your expense, no? So it's always good to know that at a certain point of a person's or a business career, you have to look at how much real estate assets you are holding, because a lot of your enterprise value or personal value will be real estate based.
Okay. So maybe as early as now, we can start encouraging people to invest in real estate. How do you actually start investing in a real estate? I mean, business or any venture that for people who are just starting, or maybe people who are actually in it already. So
there are maybe two ways of looking at this, no? The more general way for people to appreciate real estate is maybe as a passive investor, no? Because if you have excess money, what you normally do is put the money in a bank, okay, buy some stocks, okay, or basically invest in business, okay, or invest in real estate assets, no? So these are all the possibilities, no? Of course, right now, investing in a bank, the deposits won't really yield you too much.
Exactly.
Now, if you graduate towards investing into stocks naman, you're subjected to the ups and downs of the stock market, the capital markets. When you invest in some financial instruments naman that talks about certain yields, these days, you might be a little worried, no? So therefore, investing in real estate assets, particularly those that are income producing, might not be a bad idea. In other words, you participate as a passive investor in certain real estate based investments.
So So what are examples of these passive investments?
Okay, passive investments mean that you are not participating directly in the running of the project. No?
Really investing money.
The best example that I can cite these days, which is quite popular, would be condominium hotels or condotels for short. No, condotels are projects that are offered for sale, where if you buy a condo unit, a hotel unit, you become a part owner of that particular condotel.
So you're actually
and
owning
then
part of it,
to the extent that you own a portion of the condotel, you get
just
the proper dividends.
Yes,
because the whole hotel would have been run would be run by a very qualified and competent management force. So the net income will now be divided among all the hotel room owners. The person investing would be included there. So it's passive because you don't do anything to earn except putting your money there. No?
But how fast or how slow is the return on investment in that kind of?
Well, normally, let's just say if you put your money in a savings or time deposit, will make, I don't know how much this is, 3, 4, 5%.
Even less, probably,
even less, no? This one will make you a lot more. You're talking maybe closer to 8 to 10% on a normal year, or it could even be higher, no? So that means you could recover your investment between 8 to 10 years, no? But the important thing is you're investing in an appreciating asset.
Yeah, definitely.
No? So you actually have the option of selling that unit later once it's already appreciated. Let's say a unit that you buy at 3 million in a couple of years could be worth 4 or 5 million already. Apart from the cash flows you earn, you could actually unload that property or that share in the condo tel operation sometime later at a profit. No? So you're enjoying two benefits, the cash flow and the capital gains. The capital gain is really the key component of why people should invest in real estate. Because real estate assets will normally grow over time, particularly if it's a very interesting earning asset.
And what are these interesting earning assets?
Well, normally condotels would be one, apartments, rental apartments, rental condos, okay? If it's a commercial arcade or an office building, okay, all of these are real estate assets that earn. A dormitory building. So all of these are possible.
How about those who want to invest in a certain project? Is this falling under passive also, or the ones who just do a venture with a company?
Are they just putting the money there, or are
they
they
putting the money